One of the most common questions I get when it comes to a business credit card program is clients usually just always ask me, well, Brian, can I just fill out the applications by myself? Well, I actually found somebody online that actually gets this stuff. So I'm going to play this video so we can react to it and get back to that. But as I'm getting this video started, I just really think about it. I mean, even attorneys, you can represent yourself in court, okay? But the person representing themselves in court is a pretty dumbass person if you just really think about it. Just think about it like this too. Even doctors go to other doctors when they get sick because it just doesn't make sense for you to treat yourself. So there's going to be a few reasons that I go over with you on here as to why it is not a good idea for you to submit your own business credit card applications. I know credit card stacking is a huge thing, spreading. Everybody's talking about it. One of the best ways as far as you can fund your business. Let's talk about why it is not appropriate for you to be doing this by yourself. There's this guy actually gets it. So let's listen to him and then I'll dive in and add a few more factors.
Get automatic denials when trying to go after business credits and trying to get access to business loans because they're trying to shotgun applications with different credit unions and banks. Here's why that's a mistake. Most of those banks and most of those credit unions are typically underwritten by third-party servicers. So I'll give you an example. If you went out right now to 5 credit unions, it'll probably get underwritten by a company known as Elon Financial. When that application hits Elon Financial's desk, it's hitting the same lending pool. And so if you were denied for 2 applications, guess what happens for the remaining 3? You're most likely going to get denied. And so rather than just shotgunning a bunch of applications, which is going to get your business to be considered as credit phishing, which is not a good thing, you want to think more about quality of the banks and credit unions that you go after versus the quantity of applications that you try to submit.
So that is one of many reasons why it is a dumbass decision for you to go ahead and go out there and try to get these business applications by yourself. It just doesn't make sense. A lot of people, and he shared one of the secrets of the industry, and basically it is, in short, there's thousands and thousands of lenders out there, but only a handful of underwriting companies that underwrite for majority of these lenders. I'm going to tell you some of the big underwriting companies. You have Elon Financial, you have FIA, you have Barclays, you have Chase, you have Amex that underwrite their own stuff. These are just some of the major ones. Some regional underwriters is, you have like PNC, that specifically focus on one region. You have First National Bank of Omaha, FNBO, that focuses on a specific region. There's only a handful. I'd say probably no more than 10 underwriters, but there's thousands and thousands of different banks out there. So your dumbass is over here filling out this. Sorry for calling you that. But again, you got to be dumb if you're trying to do this by yourself. And if you don't know what you don't know. So you're submitting applications with all of these different lenders. And basically, as he said, you're shotgunning these applications, not understanding that they're landing at the same desk. And you're going to look like you're fishing, like you're doing too much. That's one of the major reasons why you want to work with somebody that knows about exactly what these lenders are looking for, what underwriting companies that application being submitted to. Another thing as well is stated income, a huge reason how you can maximize on your approvals. A lot of borrowers do not know the majority of these lenders do allow you to use projected income, stated income, whatever you want to call it. So as a startup, when you're filling out that application, they're going to ask you, what is your annual gross revenue for your business? Most people as a startup company, they're going to put 0 on there. But again, you're kind of shooting yourself in the foot. They allow you to use projections. They allow you to use your pro forma when you submit these applications. And we create the right projections based on your industry, based on your credit, in order to maximize on your approvals. Another reason that I want to throw at you in there, in addition to knowing the underwriter, having the right projections, is again, knowing what inquiry each one of these underwriters is going to be pulling based on that client's location, where you're actually located. Each one of the lenders, and this is another secret out there, not a lot of lenders, actually like 90% of them do not pull all 3 credit bureaus. There's only a few lenders that actually look at all 3. You have one lender that would only look at TransUnion, you have another lender that will look at Equifax, and so forth and so on. So a good professional business loan broker will scatter these applications around. That's another reason I want to throw out there. There's so many different other reasons that I can't really get into this video about, but you have industry specific industry focused type of approvals. For example, let's just say you're in a seasonal business and you're applying during a season where your business is not really making any revenue. You're going to get automatically denied. For example, during the time when the recession hit in '08, I was still in the business where there's classifications based on each industry. Regardless of what industry you're in, you are classified, and there are seasonalities when you're considered high risk and low risk. During the '08 recession, all real estate business were considered high risk. And if you applied for business application for business credit card during that time, most likely you are going to be denied, because all lenders just looked at all real estate as a whole was considered to be high risk. So you want to look at what industry are you applying based on. Other things that you want to be considering is, making sure that all the information is all accurate with all the different data banks that are out there, all the different places that the lender is going to be looking at to verify the details are being submitted, with the IRS, with the Secretary of State, making sure that your corporation is filed correctly, making sure that there's you pass what I call is compliance, making sure that the address look right, making sure that the names on the application on the LLC are the same name that you're submitting on the application. There's all of these other factors that you have to consider before you just go out there and submit. So for all of those people, if you ever gotten in the conversation with me and you've asked me that question, why can't I just not do it yourself? Well, the answer is, of course, you can absolutely do it yourself, but you're not going to be able, not even close, get as much money as we're going to be able to get you. And the worst thing about this is, once you screw it up, there's no coming back. As I said with my first point, there is a handful of underwriters that actually do all the underwriting. So once you tap into all of them, you got to wait like 6 months to a year before you can apply again. You've screwed it up. So anyway, but this is a great product. I want to talk to you a little bit and change the gears and talk about some of the benefits of business credit cards.
By the way, if you don't know, this video is brought to you by Pennington Consulting Group, where we always say our goal is to help you reach your goals. So if you're looking for some funding, if you're a business, if you're looking to start, grow, or even expand your business, or in need of some funding, you want to go ahead and click the link in the description below and visit us at Pennington Consulting Group. In addition to that, if you're looking to start your own business loan agency, this program is also brought to you by Broker Solutions Academy. And what we do is we help loan brokers and understand and simplify the various funding products that are available in the marketplace so they can properly serve their clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a glorified referral partner. So definitely there's going to be a link in the description. We've worked all year long to really package this program, and it's the most comprehensive loan broker training there is. Guaranteed you're going to be successful, especially if you're going to be having me as your coach. Okay, so definitely want to check the links in the description. In addition to that, if you're interested in some of our media services, we offer YouTube editing services. I have my team. You see how great these videos are. Come on. Okay, you look at our website. You look how good those websites are. And look at your website, okay? So if you're interested in having us work on your website, if you're interested in having us work on your YouTube, or even get your social media game just right, you want to go ahead and reach out to us. There's going to be a link in the description on how we can partner up together to help you grow your social media presence, your web presence, so you can position yourself for success, as I always say. So anyway,
on our website, as you can see, that's what I'm going over here. We're going to talk about some of the benefits, as I said. 0% money for 6 months, a year, 12 months, 18 months, some of them even, 24 months. I mean, again, very ideal. As a startup business, you need this. So you can focus on actually turning your business into a profitable business instead of just focusing on paying the interest and principal every single month. We all know statistics is out there that most businesses fail usually within the first 5 years. The number one reason why they fail is because of lack of capital. The money is right here, okay? And again, if you can borrow at 0% and give yourself a 6 months, 12 months jump without paying any interest, I mean, come on, that's ideal. Where can you go right now and get $100,000 based on your signature at 0%? Doesn't exist, especially in today's economy. Now, another thing is it helps build business credit. This is just so ideal because we all know, or at least you should know by now, by having all these debt on your personal credit, and not just that, by increasing your utilization, by increasing your balances on your revolving accounts, does hurt your FICO score. And again, personal credit was not designed for business. Business credit was. So if you're looking for business funding, you need to borrow money correctly for your business. You need to start your business correctly by putting that money that you borrowed on the business side. It's going to help you build business credit, so in the near future, you don't have to depend on your personal credit to fund your business. That's another great advantage. Pay on the amount used. Again, most businesses do, especially as a startup, they do this the biggest mistake they do is to borrow so much money. Let's just be honest. you don't even know how much money you need. You really don't. So this gives you the ability to get 50, to get $100,000, and it's right there accessible for you. So if your first month, if you only use $10,000, if you only use $5,000, you only pay on that amount. And the beautiful thing about it is you have what I call continuous access, where you pay down, you use it again. You pay down, you use it again. You don't get that when you're talking about a business loan, okay? Another thing is it does not increase your DTI. DTI stands for debt to income ratio. True story that I'll give you right now. I had a client of mine, very successful millionaire, had a chain of grocery stores all over. He was trying to build his dream house, okay? Now, when you try to borrow money for any owner-occupied residential properties, they look at your debt-to-income ratio. They look at my client's debt-to-income ratio when we're trying to get him approved for a loan, and they noticed that his debt-to-income ratio it was above the threshold that they were looking at. And I assessed my client's credit report, and I noticed about $30,000 to $50,000. I don't remember exactly, but the debt that he was carrying on his personal credit was not actually his debt. It was his business's debt. So we immediately got him business credit cards, exactly what you see right here. I think we got him like $80,000 in business credit cards. He was able to do a balance transfer, immediately started saving money on the 0% offers because he was basically putting them on his personal credit, and he was not getting 0% at the time. So transferred them on the business side, eliminated and lowered his debt to income ratio, started quickly saving him money on interest because now he had 0%, and again helped him structure his business correctly the right way. There's no restriction on the use of funds with these business credit cards. You can use the money for whatever the hell you want to use it for. Okay, so which is also a wonderful thing. And lastly, and I expanded on this, does not affect your personal credit. This is just ideal. Just really think about it. Now, before I let you guys go, I'm gonna go ahead and break down exactly the 4 things that the lenders look for in order for you to qualify for these business credit cards. We call it the 4 factors. These are the 4 things that lenders really look for as it pertains to your personal credit, because they do require that you personally guarantee these lines of credit. That's one thing that is requirement, is that you personally guarantee the lines. So they do take a sneak peek at your personal credit to make sure that you are capable of making payments on time, and also to give them a gauge as to how much you can get approved for, and it's based on what you've been able to handle in the past, your highest past balances. Again, a conversation for a later video. But the main 4 factors, the main 4 things that the lenders look for is, number 1, negative items. I would say, late collections, charge-off, bankruptcies, judgments, pretty much anything negative on your credit report, depending on how much money you're looking for, how much effect these items have on your credit report. We will make a determination if we can go ahead and proceed, get you funded, or if we need to make the necessary adjustment before we can get you funded. The second thing that they look for is your utilization percentage. I will tell you right now, regardless of how high your credit score is, I've said this before, but we're moving into an age where credit score doesn't matter. It really doesn't. I don't give a shit what your credit score is, because it doesn't matter. Regardless of your credit score, they look at your utilization. And based on your utilization percentage, they can make a determination if you are going to get qualified or not. I've provided you a chart, and by the way, you can download this matrix, this credit funding matrix, in the link below if you want to go ahead and take a look at it for yourself. And there's a video that I expand on this credit report matrix that I'm probably have my editor put somewhere right here or there on the video, so you can watch that in detail. It's definitely on my channel. But based on your age of file, which is the third factor, the age of file is not how old you are, but how old your credit profile is. Based on the age of file, I kind of give you an idea what is the best target utilization for you to maximize on your approvals, okay? Which is the third factor. The fourth factor, and the last thing the lenders look for in order for you to meet the minimum criteria, is inquiries. And I always say this to my clients is lenders lend money to people who don't look like they need money. So if you have a lot of inquiries on your file, you look like you're desperate, and lenders are not going to lend to you regardless of any one of the other factors that we just discussed. So you want to look at these 4 things in order to see if you qualify. But if you're interested to see exactly what you qualify for, there's going to be a link in the description. Simply go to PenningtonConsultingGroup.com, schedule a time where we can go ahead and discuss what your funding options are and how much we can get you qualified as far as getting a business credit card. But I love this gentleman. He cleared the air and is letting you guys know exactly the reason why you're not able to do this yourself. You need a professional to get this done for you. I appreciate you for joining me on the video today. I'll see you on the next one.